Vitale, Vitale Wealth Management with the Great Investments Market Update. All information is gathered as of the week of February 17th, 2025. Let's get into the week in review, and we hope everybody had a wonderful Valentine's Day last week. Last week, the major indices gained. The S&P was up 1.52%, the NASDAQ 2.6%, and the Dow was up 0.65%. Now, the Russell 1000 outperformed value, which is the Russell 1000 value, gaining 2.03% versus 0.65%. International developed markets continued to outperform U.S. markets last week. The EFA was up 2.66% for the week. Meanwhile, gold traded near record highs again, while silver trailed toward its highest price in over a decade. Gold is around $3,000 an ounce, which is huge, up over 50% for last year. Upcoming economic relief, which is today, the FOMC minutes will be released, and on Friday, existing home sales data will be published. You may have noticed the market's been actually going up this week. It's because earnings reports are coming in very, very strong for companies, which of course drives the market. Earnings drives the market. Let's look at the market outlook. February 17th, markets will be closed, which was Monday. And last week's the CPI released sticky inflation coming in higher than expected, which is why we saw a little downtick. Core CPI, which excludes volatile food and energy, rose 3.3% in January, exceeding the previous month's reading. On the consumer side, the U.S. retail sales came in below expectations, falling 0.9% in January, seasonally adjusted compared to the previous month, which of course we take this with a grain of salt because they're always revising these numbers. This marks the largest monthly decline in a year as earnings season is nearly at its end. Profits continue to exceed expectations. Notably, the earnings gap between the Magnificent Seven stocks and the rest of the S&P is narrowing, with the other 493 companies in the index showing accelerated earnings growth. Which a lot of people are wondering, how come my account's doing better or this and that? Well, if you're not in the Mag 7, you missed a lot of the upside, which is why our Core Select has that. On the international stage, European equity markets are outperforming their U.S. counterparts so far in 2025, after lagging in 2024 and much of the past decade, actually. The European index is up more than 12% year to date, while the S&P 500 has gained about 4% so far in 2025. So you can go European. We might see that finally start to come up a little higher this year. But still, I think domestic is still the place to be, but you can dabble a little bit in European. There are no changes in the gradient investment portfolios in the last week, so a lot of times we're going to rebalance every quarter unless we have to go pivot a lot quicker. Talk about some stocks in the news. Ecolabs, which is owned in the Core Select, the Minnesota-based company, reported earnings last week that surpassed expectations, highlighting record growth sales and strategic growth initiatives. Shares were up 7.6% for the week. Also, Legrand, which is owned in the G40I, that's the international one. It's a French industrial group. Legrand developed better than expected earnings and increased guidance for 2025. Shares gained 12.95% for the week, which is pretty strong. So that's what you're going to see, the international starting to come up a little bit this year. Is it too late to get into international? No, you can have a piece of it. But you got to remember, for the last 10 years, we've seen it lagged. So that's why we pivoted a lot of people out of the international, got into more growth. Even in our tilt portfolios, we tilted out of international because the opportunity just wasn't there. We're starting to see the G50s doing fine. Our Core Select is still doing strong, and we're very happy with those returns. However, a lot of time we're going to talk about, too, was a new portfolio that came out that we want to talk with everybody about, especially for non-qualified money. It's actually a tax-efficient strategy where it's actually going to be buying and selling. So a lot of times if we're having earnings or we're having losses, it's going to automatically buy and sell and offset those to be very tax-efficient for the non-qualified accounts. It's a very smart strategy to use. Also, as you notice today, I have my hat and my pullover on. I'm actually heading out to Louisville, Kentucky to go to the Stonewood training. I'll be there for Wednesday, Thursday, Friday, and basically learning about tax strategies. We're going to digest a lot of the new tax strategies, new tax legislation that's going to be pending. Becky is going to be talking to us about what's happening there. That way we'll know. We're really hoping we see the taxes extended from the Tax Bill and Jobs Cut Act from 2017, which, as you know, is going to expire at the end of this year. So we're hoping that the House and Senate gets one big, beautiful bill in to get that through. So we need to see that extended. Otherwise, taxes are going up next year. That's how important that's going to be. So hope to come back with some good news and see where we're going to be for that. But looking forward to just getting more information out to everybody. That's it for the week. God bless you. We'll look forward to seeing you again next week. Thank you so much for being part of the Vitale Wealth Management family. If you need to get a hold of us, 855-756-5700. Visit us at aradvisorsinc.com. Oh, I screwed up again. Visit us at vitalewealth.com. I'm so used to saying that. So visit us at vitalewealth.com, and God bless you. We'll see you again next week.